recently. I started working in this industry about a year and a half ago. So a quick introduction to me. I'm an assistant investment analyst working for an investment consultancy. And that means what I do is mostly performance reporting on multiple portfolios at an aggregate level to see how things have performed. I don't do sort of stock pitches day to day, but I'm sure these guys do. So I'll hand over to introduce the panelists for today, starting with Andrea.
Thank you, Monica. The classical mute on mute, not yet there with my muscle memory. So great to be here. My name is Andrea Gentilini, Italian, obviously, but emigrated to Switzerland and then the US, where I grew up professionally. I am heading a fintech company called Novus, which works with hedge fund managers on using big data to perfect their portfolio construction skills, which is, as you'll hear today, half of what it takes to be a successful stock picker and portfolio manager. I'm an engineer by background and did a number of things in the financial markets, from investment banking in the FIG industry through to portfolio manager of a precious metal derivatives fund, and most lately as an executive of a fintech company.
Thank you. Sean?
Cool, thanks, Monica. So my name is Sean. I am an investment analyst. So that means that what I do is try to find individual stocks that I think would fit our fund, and I pitch them to our investors, and I focus on long-only equities. So that means that I'm not looking to short anything. And I've been working for about 4 years, so still fairly new.
Thank you. And then Martina.
Hi, everyone. My name is Martina, and I'm a growth investor at a tech fund called Unbound. So I mostly invest in tech companies in the private space. Previously, I've been at Citi, where I was part of the investment banking team there. And yeah, I also graduated pretty recently, 4 years ago, from Edinburgh University. So happy to be here today.
Thank you. So I'll get started with asking, why might you be asked to do a stock pitch in an interview? So starting with Sean, that one.
Yeah, sure. So I guess it's quite hard to assess and distinguish between people based on sort of academics and CVs alone. Usually people applying are broadly in, good universities and good academics. It's a really good way to just get a sense of how people think about things and how people are kind of self-starters, in that there's obviously, when you're a professional, you do have a lot of resources that you don't have when you're not a professional, but there are quite a lot of resources that are sort of just publicly available. And if you spend the time and go and do a lot of work, it's a good indicator that you're able to do thorough research kind of on your own, self-directed. And it's a sort of good way to clarify the way you think. It's also a nice opportunity, to be honest, just to ask questions and sort of see how you react to maybe new information or a new question. Obviously you're never going to have as much experience as the people on the other side of the table. So if you miss something out, which is very expected, and then someone prompts you and say, well, what have you thought about X, Y, Z, then it's a good way to kind of get you to think on your feet about something you should have some background knowledge of because you've done some work on the company, but maybe you haven't considered all the factors. So it's kind of a nice way to just observe your thinking and your work stream, really.
Thank you. And Martina, do you have anything to add on why you might be doing a stock pitch in an interview?
Yeah, sure. I mean, I would agree with that. The primary aim is to really just check your interest and kind of your interest in the industry, the role, and kind of a way of getting to know how you think, how you structure your thoughts, how you defend your perspective, your views, but also how you think under pressure. But what I tend to look for when I interview is also whether the person really understands the fund or my company, what is our investment strategy, what is our investment thesis, what kind of companies we look at it, and the end, what you pitch needs to be suitable to the investment thesis of the fund you work for. So I think this is also an important thing to keep in mind.
Thank you. Yeah, I think it's stock pitches and interviews are a really good way to demonstrate, first of all, your knowledge of the company that you're interviewing at, that you understand what their thesis is, what their focus is. So if they're, you know, a long only equity house, pitching that you want a shorter stock, it's probably showing maybe you haven't done the right level of research on the company that you're interviewing for. But it's also a chance to show how you are able to handle questions under pressure, present, to demonstrate maybe some of the research skills that you've illustrated in your CV, amongst lots of other things. So if you haven't been given a company to pitch as part of your interview, how might you go around finding one? I'll hand over to Andrea.
I think what you need to do is what Martina mentioned, and you as well, Monica. Every company will have a little bit of publicity around their investment philosophy. So think about what could they be possibly looking at, given the sector they say they specialize in, or the style of investment that they say they put to work. And after that, just declare your assumptions based on having read this and this. I thought this will be of interest, and go on. So as long as you spell your reason as of how you got there, that's enough.
Thank you. Ashul?
Yeah, sure. I completely agree with Andrea. It's obviously a really wise first step to know your audience. I'd also sort of not try too hard. There are some companies that are really difficult to understand, even if you are an analyst who's sort of covered a company for sort of, you know, 3-4 years. Insurance companies are really hard. Banks are really hard. There's just lots of regulation. You're just giving yourself a really uphill battle, and they also might mark you down and saying, why did you choose something that was difficult? You could have just chosen something that was a bit more familiar and understandable. So yeah, choose something that interests you, because if you are going to spend a lot of time on a company, it helps if you don't find it boring, really. You know, if you find pharmaceuticals interesting and you find a particular drug interesting, you know, sit down and read about a company that is innovating in the sort of, you know, medical pharmaceutical space. And if you find it interesting, it will help you do the work in a more understandable way. I'd also maybe steer away from companies that have sort of a lot of market exposure. So what I mean by that is, let's say you're a commodity company. It's really difficult to speak to that intelligently, because number one, you have to really understand the actual company in the same way you do for everything. But number two, you then have to understand the oil market and the commodity cycle and all of the other extra things that go with the space the company is in. If you're talking about, off the top of my head, I know nothing about Netflix, but if you're talking about Netflix, it's a little bit easier, because, you know, you're talking about subscribers and that kind of thing. There's no sort of external macro factor that you have to understand in detail. So I choose something, you know, to Andrea's point, that fits the audience, that isn't too obviously complicated, that you're interested in, and maybe that doesn't have a massive whirlwind of moving parts that you're going to have to try and understand.
Thank you. Matthew, do you have anything to add on that point? No? Okay. Thank you, sure, Andrea. I also forgot to mention, guys, if you have any questions, either put them in the chat or the Q&A, and I will answer or fit them in as and when best suits. But yeah, I think choosing a company that either fits the company that you are interviewing for, either the style, so if it's a quality house, choosing a quality company might fit better than a value company, so that's a cyclical, so you wouldn't choose like an airline, you would instead choose something like maybe a tech name. Some couple of bits of advice are definitely choose something that fits your interests, and because investing is a career that you can go into from any background, so I did psychology, did a little bit of neuroscience whilst I was at university. One stock that I would have thought to pitch based on things I'd studied would have been Moderna, which ended up, you know, doing really well, but also included something that I know a little bit about, and I would be able to show some of my personal experience in the interview because of the company that I chose. So I think that's a really good bit of advice. You know, and what companies to avoid. Absolutely no need to make your life harder than it already is. It's an interview. There's no need to stress yourself out not understanding the background of the company. So if you pick something and you're starting to research it, either quantitatively or qualitatively, how would you suggest going about that? And I'll go back to Shaw.
Yeah, sure. So, you know, the way I like to do it always is public filings. You know, pretty much any company that you might consider that is large and listed will have an investor relations website. So if you type in company name and then IR or investor relations. They'll have a website dedicated to basically giving you information about the company, because obviously they want you to invest in that company. They will have annual reports. They'll probably have quarterly reports. Maybe they'll have an investor presentation as well, or some other presentations. And, you know, they are trying to communicate to you their investment case. So make it easy for them and just go and read their public filings. Beyond that, you know, I don't know that you necessarily have to do a huge amount beyond that, because that's very comprehensive in and of itself if you sort of sit and read about a company from its public filings. But beyond that, there are other resources that I might recommend that are free. It sounds a little trite, but there's a real community on Twitter of analysts who love to share ideas with each other. And often they will have their own blogs, which they will link to. And if you just search for the company that you're interested in, see if somebody's written it up. Almost certainly, if you're looking at a well-known company, somebody will have written something intelligent on it. And, you know, there's absolutely no downside to just reading what someone else has to say. Either you'd already covered it, or you think it's nonsense, but almost always it will add to sort of your perspective. So that's kind of my sense of, you know, the real places that I would look. Primarily, again, look at their public filings. They're trying to tell you why they're a good investment.
So if you were to look at a quarterly and annual sort of report, what sort of things in there do you think might be particularly of interest to someone thinking of pitching the stock?
Yeah, so it depends on the country, because you have different reporting standards in different countries. The American one is the best, in my opinion. But there's a section called, which in US filings is called Management's Discussion and Analysis. And you'll have something like this in most companies, where they will discuss what is it that we do, how do we make money, and they will try and take you through, you know, beginning to end. This is how we make money. This is what we have done over the past 5 years. Often there'll be a chart with sort of 5 years of numbers, sort of the key headline numbers. So that's a really good place to start. Start with it's called MD&A, Management Discussion Analysis, get a sense of what they actually do. And then to my mind, I would try to piece together some idea about the financial statements. You definitely won't understand all of it, and that's absolutely fine. Just either write down what you don't understand and Google it, or just be comfortable with not knowing things. That's kind of just the nature of being junior and learning, and that's absolutely fine. Try and get a sense of the really important numbers: revenues, margin, net income, and try as well. It will definitely differentiate you if you think about cash flow as well as income. It's a little bit more complicated, but it's something investors really care about. So I think it would come across as impressive if you try to understand, you know, companies obviously make money, but there are ways to report that you've made money without actually, you know, increasing the cash that you have at the company. And investors tend to be skeptical about that. So it's very useful to say that, well, they make money, but they also generate cash, and that's useful. So again, all that information you'll get from the financial statements, which everyone will have in a reasonably similar format. So MD&A and financial statements.
Thank you. And Martina, do you have anything to add on?
Yeah, I mean, in terms of resources, I'd say one more resource which you could consider looking for is IPO prospectus. So I guess one, depending how like recently the company went public, but I would say if it was like within last 10 years, for example, like I think this document would be helpful for you to understand in a bit more detail what the company kind of stands for, like what they do, like industry analysis, as well as you can refer it in terms of how the company grew, how they're performing since they went public, etc., etc. So I think in terms of like, yeah, the public resources, this is one more thing I would add. And I mean, what I did and kind of what I also pay attention to and nowadays is like whether a person really understands, you know, what the company does, how they make money, who's their customer, like what's their product. So I would suggest like keeping those high-level questions in mind, because you may kind of get lost in like looking for specific numbers, specific details, and get overwhelmed by amount of information, and then you just forget like the very basic but the most important stuff on like what the company does and how they make money. And you would be surprised how many people actually get stuck on that sort of simple question. So I would definitely stress it out and just have kind of some sort of framework in mind. What's interesting, what's important for your pitch, what aspects you want to cover, have this structure, have this framework in mind, and just try to cover all those points.
Thank you. We'll talk a little bit about how to structure a pitch later on, but we've had a couple of questions come through. So one is, are there disadvantages of choosing a company which recently went public to pitch, such as Porsche AG? Anyone in the room feels comfortable with that one?
Well, let me take a crack at that. Yes, of course, you have less data, but I think this was a point that Martina was mentioning. If you went public, there is an IPO prospectus, so you can take a look at that. And also this, I mean, Porsche is a relatively new IPO in a really mature industry. So there's part of the stock pitch that has to do with the analysis of the market that the company is playing into. And that you got to nail down, because is it a mature market? Is it a growing market? Is it a declining market? That could be half of the stock success, you know? More on that later, but I guess that would be my short answer.
Thank you. And Martina, did you have?
No, I actually pressed it by accident. But no, I very much agree. I think it also like just depends, you know, who you're interviewing for and what you're asked for. Like I don't think like see like a major disadvantage, but yeah, I guess it all depends. Like to relating to our previous points, like what type of fund, whether you're comfortable talking about this industry, whether actually you can produce some sort of thesis and story, right? Because I think this is the starting point, really.
Yeah, I think being able to come up with some sort of narrative around the stock you're pitching and why can be really helpful to try and maybe fill in the gaps of the things that might be more difficult for you to understand at this level, sort of before working in the industry. So I've had a question come in about how do you strike the balance between quantitative and qualitative analysis? And I think there are lots of different, I think if you can play to your strengths, so you won't necessarily know everything. So personally, as someone who came from psychology, I'm much more comfortable with the qualitative analysis, the story, the who is the company and what is the context. So who are the clients, who are the suppliers, who are their competitors, what are complements that that company needs. So if they make cars, they'll need semiconductors, which is another company, and what is their relationship with those suppliers? It's something I'd be much more comfortable talking about when I started, as opposed to all the quant heavy reading through financial statements. And so if you feel particularly strongly one way or another and what your strengths are, I would say to play to that. Or if you're interviewing for a very sort of quant heavy, technical, fundamental driven house, play to those strengths of what the company you're pitching for prefers to use. Sometimes on their website, they'll say how they analyze stocks, what their process is, and what their philosophy is. I don't know if anyone else has anything to add on that quant qual point.
I do have something to say about that, which is, so I'm an engineer, background, disclaimer, bias declaration. And I was born thinking, you know, the equation speaks for me, the numbers speak for me. And there's a whole vein of literature and opinions. You'll hear a few in your career of people that say, show me the numbers, I don't believe anything but the numbers, and blah, blah, blah. That's the most false thing you'll ever hear, in the sense that people who say that have forgotten that they themselves thinking stories first. And there's a mounting evidence, even from everyday's life, that points in that direction. For example, people shown a variety of options and start to weigh the pros and cons, they get lost and never decide. Also, there are individuals that miss a certain piece of their brain or have been receiving damage to that piece, which is decision making. And without it, it's unfortunate, but these people, they can't decide. They weigh pros and cons. They try to quantify anything. They can't decide. This proves to you that the ultimate final decision will be informed by your guts and qualitative arguments. So my approach to life is, you always start with a qualitative argument. This is where you build your hypothesis. You say, I think this, and you write it in simple terms. Then comes the quantitative. Let me prove it wrong. And if you don't succeed at proving it wrong, then it means there's something to it. And finally, the last is your gut feeling, that everything may be lining up until the end, but if you don't feel comfortable about making that decision, go with your guts. You know why? Because when someone will challenge you, Martina mentioned that earlier, they will push you to test your conviction. And if the gut is not with you, then you can have written the best stock pitch forever. If you can't stand behind it and defend your thesis in the face of adversity, what's the point?
Thank you. So just to sort of summarize briefly, when researching a company, the resources that we've suggested include like Twitter, IPO prospectuses, annual and interim reports, press releases, online, how you feel about it, things you're interested in, and then things that you can look for. Just Google it. Investopedia was my best friend when trying to find things. If you want to look up P/E ratios, how things compare to competitors, you can find all of that online. It will help you out. When it comes to moving on, I guess, to valuing a business, how do you determine if a company stock is good to buy or not based on that information you may have gathered? Andrea, do you want to start? Yeah.
So this gets into an area that I think will be with us for some time during this session together, which is how you value will depend on your philosophy. There is no one unique way of making money by definition. Investing is not a deterministic science, and therefore your valuation philosophy, your valuation approach on how to determine the value of a company will result from the way you invest in your style. And that's the hardest part for you starting your career, which is, I guess, when I started my career, I was looking at people 20 years ahead of me, and I was like, oh, how can they be so confident, effective, straight to the point? And I was like in the seventh cloud of confusion. And this is because they had 20 years of having made mistakes and they got to their style. That's the important piece. They got to their style. Whereas you have an open mind and you're approaching things in a very open mind. And I guess, Saul and Martina, they must have mentors where they are, which are more or less guiding and shaping the way, or at least guiding the experimentation for everyone to find their own style. So there's gazillions of them, discounted cash flow, and I'm sure Saul and Martina know more about that. But more importantly, start with your investment philosophy and then find the valuation methodology that speaks to that. Are you a value investor? Okay, let's measure value. Are you growth at the reasonable price investor? Great. How do you measure growth at the reasonable price? And you can Google, everything is public. So the important point is what is your assumption? The rest will follow.
Thank you. Sean?
Yeah, sure. So I think Andrea makes a really good point. And I would say that effectively the whole purpose of investing is, it sounds sort of stupidly simple when you say it, but you want to buy something today that over time will appreciate. So it's going to go up in price. So there's kind of there's two drivers to why that is, why that's going to happen. So either the company's not really going to change, but people are going to realize that actually it's maybe too cheap. And so everyone's going to try to buy it, and that will raise the price, and you'll be proved right. The other is that actually it's fairly valued, but it's an amazing company, or even an average company, but it's going to grow materially. So if someone pays 10 times earnings, but those earnings keep going up, then that will just naturally increase the price of the shares. So there's obviously lots of moving parts, and that's an oversimplification, but effectively what you need to present is why you think today it is worth X and tomorrow it's going to be worth X plus Y. And so I think it's really important, and it shows a mature investor or mature thinker if you can separate your assessment of the quality of a company from the valuation. In that, especially 2021 was a really nice example where you saw companies that genuinely were exceptional companies, and that ended up not mattering because you bought at such an inflated price because you didn't think about what is that worth, and everything has to be worth something. which means that you can overpay for something. They bought for far too high a price, that it actually didn't matter how good the company was. And Microsoft is a really good example. People who bought Microsoft in the dot-com bubble in sort of 2000, 2001, they didn't break even on their money. They didn't get all their money back until 2016. Even though in the interim, as we all know, well, we're not doing this on Zoom, on Teams, we're doing it on Zoom, but we're using Microsoft products every day. We know that they're an exceptional company, and they've proven that 100,000 times. But if you pay too much, that will harm you. So it's really important to articulate both why you think the company is a good company and why you think it's a good investment. I think those are really important things to be able to articulate individually. And to Andrea's point, just do it in a way that makes sense to you and you think you can justify and provide evidence for. That's important.
What might be some numbers that you'd look for, or types of things to look at to say, is this fairly valued? Just
yeah, I guess it depends on who you are. I'll tell you, I can only tell you what I like to do. So in general, the reason that you buy a business is because that business over time will produce cash flows. People like to distract people by saying value and growth. And I think there are lots of differences, but overall, what we're doing is we're trying to buy a stream of cash flows for less than what it is worth today. If I said to you, I will pay you £10 a year for the next 20 years, how much will you pay me? That's all we're doing. We're just trying to work out what that amount of money is. The difference, I think, between value and growth and the disciplines is that if you're a growth investor, you're really trying to understand what that £10 is going to do for the next 50 years. Actually, maybe, I said I'm going to pay you 10% of my income, and you think that my income is going to go up. So you think, even though it looks like, too expensive versus what he earns today, he's going to earn loads of money. I know that because I've done a bunch of research, so I'm going to buy it. So I think, trying to have some picture of what you think the company is going to earn over a reasonable period that is also forecastable. If you walk in and you present 50 years of earnings, you're probably going to look a bit silly. If you put in 10 years and maybe come to what we call sort of a terminal valuation, which is how much will this company as a whole be worth in 10 years time. So 10 years of those cash flows. In 10 years time, someone will pay me, I don't know, make up a number, 10 times earnings. If I discount that at a particular discount rate that is worth, let's say £10, and currently I can buy it for £5, so it makes more sense to me. And again, value and growth investors do both, they both do that. The only difference, I think, is that if you're a value investor, you tend to look backwards. So the company earned £10 every year, so I'm pretty sure it's going to do it again, and I'm happy with that. And growth investors tend to look forwards, and they say, yes, they earn £10, but actually they've just come up with an amazing new product. They're going to take market share. They're going to grow. That £10 is going to be 11, 12, 13, and I'm happy to underwrite that growth and buy that future cash flow. And that's kind of the way I would do it. I don't know if other people would like to, offer their thoughts.
Martina, do you have any thoughts on valuing a stock?
I mean, I guess just to add would be, if you're predicting that, the company will grow, or like their cash flows will increase, whatever, like just have an story why, right? So link it to like what you read about the company now, like what you read about the industry competitors, etc., how they compare, and be able to kind of defend your assumptions or defend your projections. I think at the junior level, this is more important rather than, just kind of making an extremely complex analysis, but then not being able to kind of say why you did certain things. Or kind of if you do very complex analysis, then like people will start questioning like all your different assumptions. And I mean, I don't think it's necessary to do that at that level.
Thank you. Yeah, so I guess to sort of summarize whether or not company's good to buy, think about your philosophy behind that. So are you looking for a sort of historic cash flow value type company, as you said, or a forward looking, what will this do in the future? Some things you could look at might be the company's historical share price to see if, like Microsoft, it was absolutely, it was through the roof, or is this the highest it's ever been? Look at it compared to maybe other competitors. Is everything going up at the moment and now's a bad time? Or over 2022 we've had bear markets, things are cheaper. Some people think this is a great time to come in from cash and buy certain stocks. And if you're interviewing around now, that could be something to bring up, that sort of understanding of the wider environment, as well as how you choose to value the company. So are you choosing to look at a series of cash flows in the past and say, this is certain that it will come up in the future, or if those haven't been there, but you've read something in the statements or a press release or on Twitter that you think this company's just developed something that could be really big. Have they started, developing something that might help with the climate transition, or are they putting lots of money into research and development that you think of something that you understand or that you think is really interesting to put forward that might be a reason why this company could be good to buy or not. One thing I'd have to say is to include why you might be wrong. I think showing and understanding that you could be wrong during a presentation shows a lot of confidence and sort of maturity in your understanding of the level of analysis you're able to do at this stage, but also just at all. Everyone could be wrong with what they buy. That's why not everyone makes money all the time in investments. Then going on to consider other parts of, rather than just value, sort of ESG, so environmental social governance factors, and the values rather than value of a company. Martina, would you feel okay to start us on this one?
Sure. Yeah, I think in terms of the resources, I guess the again we come back to investor relations page, and I did brief research on few companies, and I saw that actually now starting to have some separate sections on ESG. So the topic is definitely very important and becoming very, very popular right now. So I'd suggest this as a main resource to look at, and they would have reports, they would have some disclosure metrics. So I guess it's important to familiarize yourself and again communicate that, especially in relation to competitors, because the company may be at the forefront of not necessarily ESG reporting, but actual actions to improve their governance or environmental and social responsibility. If there is nothing specifically focused on ESG, in terms of reporting, I would suggest going to annual reports, because they may also just disclose something annually. And again, just look what's available, how the company is acting towards that. And I would also say just make it relevant to the industry. It will be more relevant to certain industries than to others, like for example logistics, supply chains. I mean, this will be extremely important, or companies who produce products and are very much reliable on supply chains, they're for example CO2 emissions or carbon neutrality will be way more I guess important or relevant to them than to others. So in terms of just doing a slide or 2 minutes presentation on ESG without and just stating few things you write about, just think about and reflect what's actually important and what's relevant, because again, coming back to things, and I feel we've mentioned several times already, everything you say needs to have a reason and needs to fit the story, right? So just taking the box as an exercise of saying few things is not gonna add much value, right? It again needs to fit to the equation and your story, your understanding, and value generation for shareholders.
Yeah, thank you. So I'll just quickly touch on the ES and G, I guess. So environmental, one easy way to look at is things like so MSCI do ratings of companies. Sustainalytics do different ratings on the ESG quality of companies. These aren't fully standardized, but that's one sort of quick way you could try last minute to find something on the ESG of a company. Headline things you could look at, so for environmental would be sort of carbon emissions, looking at scope 1, so that's those involved with directly making the product, whatever that is. Scope 2 would be the full impact of that, and Scope 3 includes end of life use. So John Deere is a company that makes tractors, and their Scope 1 emissions are involved with the building of that. Their Scope 2 emissions are wider. I've forgotten what that is. The Scope 3 emissions include like the petrol that everyone who uses the tractors forever, and the impact of those, the petrol, diesel, fuel. So that'd be one example of the type of thing you could look at for E. For social, could be have they had any scandals, rights. That's a good press release one to find. Probably also Twitter, things people have been saying. So do they pay their staff well? How's their equality, diversity? What sort of things going on there? And governance could be things like makeup of the board. Have they had the same auditor for forever? Because some people don't think that's good governance. So those are just some brief examples of the types of things you could look at and try fit into your story about why this company might be good or not so good or worth buying. Sure, Andrea, do you have anything to add on ESG evaluations of the company?
So ESG is an interesting thing because when I started my career, it was nowhere. And I'm very happy that it came to the fore. This is an example that the world may change below you. And the things that used to hold, that maybe you poured hours studying, do not hold anymore. I'll give you an example. The Benjamin Graham Value-Based Investors, you may have been told to read that book like if it was a Bible. If you had practiced that style of investing over the last decade, you would be out of a job because value has not performed. And ESG considerations are now driving flows more than anything else. Who would have expected? So be open, because nothing is dogmatic. Unfortunately, I'm giving you more confusion than certainties, but the only certainty is uncertainty here, in the sense that 20 years ago, if someone would have said, oh, whether a company is doing something for the environment will attract investor flow, they would have said you're complete out of your mind. And today, luckily, this is happening. So maybe tomorrow, in 10 years, someone will say that by reading tea leaves, you're going to find that if a companies are performing, it's going to sound crazy to you right now. Maybe one day it will. So you have to be mindful of that. Mindful, though, doesn't mean that you have to be distracted by it. So again, the most important thing in investing is finding your own style, because your own style is specific to how you're wired as an individual. And there are styles that maybe the trend will flash out and they'll seem attractive to you, but it may not fit who you are deep inside, and that's going to be a disaster. That's when disasters occur, when you start investing in a style that is not yours deeply. And there's a variety of them. Finding your own one as quickly as possible is part of the job here.
Thank you. So did you have any?
No, I think everyone's covered all those.
Okay, cool, thank you. So now I'm going to move on to actually preparing a pitch, and sort of what should you include in a presentation. So we've heard about the different ways you can look at things, how to find a company, why you need to do a pitch in the first place, what sort of resources you could use to be able to research that, and different ways to value a company based on actual numbers, money, cash flows, and ESG sort of value propositions around that. So Martina, are you happy to talk about what you would include in a presentation?
Sure. I mean, yeah, first of all, I would check what they're asking to include, if they're asking me to include anything. If not, I mean, again, like have like a framework in mind, like, so of course, like company description, the kind of key parts I mentioned, so what they do, how they make money, etc. Market competition, could be kind of customers and go-to-market product. Financial performance, so some analysis of the past performance as well as future performance. If first, yeah, you're asked to do that. Second, you're able to produce some model or some forecast. Then the valuation. I think it's again important to kind of again fit it to investment strategy of the firm, but yeah, state whether you think the company is fair valued, undervalued, overvalued. I think it's important kind of have your view here. Team, I think it's also important to cover it. And yeah, definitely, your investment thesis highlights and the risks. So just show the critical thinking, show what can make go wrong, how we can mitigate it, but still be cognizant that yeah, it may not go as you imagine. And I would say, this is in terms of framework. Like other tips would be definitely practice, for example, with a friend. Think of what kind of questions you may be asked, to be prepared, or become comfortable with being asked questions on what you prepared. I would also suggest to check the news on the company, like not on the day, but maybe like few days before, in case something important comes out and you're asked on the day and you just don't know. I think it's important to follow the news in general, but in terms of this exercise, I think it's crucial. And yeah, again, just to stress out, like, know what the company does and how it fits the strategy, because yeah, it's so common for people not to know it, like, honestly.
Thank you. Andrea, do you have any things about structuring a stock pitch and what you think?
Yes, so there was actually a question in the chat about what's the ideal structure. I would argue the ideal structure, let's bring it down. Have a structure first. There's no ideal structure, but have one. And more importantly, spell it. And this is something that we need to appreciate here, which is, in this industry, your interviewer will have, by definition, a very short attention span. They'll be extremely biased, high conviction, borderline stubborn. And therefore, you really only have a few seconds to lay it all out. So this is what happens, to boil it down. If you start rambling, you'll be interrupted at second 12. If instead you start saying, thanks for the opportunity, I'll structure my presentation in 4 steps. First, I'll describe what the company does and why I think it's a buy. 2, I'll describe the financials, the market, the competition. 3, I'll describe the risks. And 4, I'll describe the process to monitor what's going on. You've prepared them for a 20-minute pitch. But if you don't do that and you start getting into it without any preamble, then you'll be interrupted. So the ideal structure is to have one and spell it out. Then you prepare the audience for listening.
Thank you. Sure, do you have anything to add on the structuring here?
Yeah, sure. I just 2 things, I guess, more on inclusion than on structuring. Both, I totally agree with Andrea in terms of laying out a structure and sticking to it, and then being clear. And I've had experience where I've put out a structure in advance, and then the interviewer has said, let's not bother with the first 3. I'm not really interested in talking about those. Let's go to number 4. And that's all we talked about. And that was good, because then I just didn't bore him with stuff he wasn't interested in, but I flagged him in advance what we were going to do. So that was really useful. I did 2 things just on inclusion, which I sort of thought about on the back of what Martina was saying. So one is, if there are big changes in the company, don't just include them and not talk about them. You'll have a company and you'll have the financials, and 1 year their margins were 10%, 10%, 10%, and now they've gone to 30%. It's gonna look a bit unimpressive if you don't bother explaining that, either explaining why it's going to normalize, explaining what happened. But if there are sort of fundamentally big changes that you're presenting, it's kind of impressive and worthwhile to dig into those and explain them. The other thing I might do, again, sort of to your point, Monica, about being open with not knowing things and open about what it is you don't know. But so first of all, have a section on questions that I still have that I don't have an answer to, but I would like to get an answer to. If I worked here, this is what I would try to find out. And number 2, present the arguments against something. Most of the time, there will be 2 sides of the argument. Most people will say, okay, actually, I don't like. Someone mentioned Porsche. I don't like Porsche because of this reason, this reason, this reason. If you're able to sort of get some sense of why it is people don't like it, and then why you think they're wrong. And again, you don't have to be right. You just have to present something that's coherent, evidence-based. Say, yes, I've thought about this, but X, Y, Z. because somebody who just says this is an amazing company, we should buy it, and hasn't thought about any of the counter arguments, isn't really doing the job properly. So again, those are more on kind of inclusion pieces rather than on structure, but just sort of, yeah.
Thank you.
I have one other comment, which is in terms of style of presentation. Keep in mind, folks, that there are two diametrically opposed styles of presenting, inductive and deductive. So deductive, let's start with the one that we'll exclude very quickly, is the one you learned at school, which means like in any good theorem, you start with the assumptions, you lay out all the steps, boom, you arrive at the conclusion. The world, or at least the audience that you're going to be pitching to, very often works the opposite way, which means hit me with the conclusion, prove the facts later. So that's where the point that Martina was mentioning is crucial. Rehearse, rehearse, rehearse until you're dead tired, because by the 12th time you rehearse, you'll get your storylining down to a level of succinctness and impact that will resonate, as opposed to rambling forever without having rehearsed. So inductive reasoning is, in my mind, the way to go. Hit with a thesis, follow with the arguments, as opposed to the opposite.
Thank you. So I think very typical pitches should include a description of the company, an overview of the industry and who their competitors are to give some sort of context, some sort of analysis as to what their strengths and weaknesses are, so the for and against, as Shaw was saying, about why this company is worth buying. Then demonstrate your understanding of the financial analysis that you can do, your understanding of the stock price and where that is, what the valuation of the company is. And it's okay if you don't fully understand all of those things, or if you know absolutely loads. Just be open and honest about that. And if you have sort of questions about things that you think are really key, say, I would really like to know more about this and I'm excited about learning about this when I get there. I think that's a really great piece of advice. And then, what is your investment thesis behind that, as Martina was saying, the catalysts and the risks. So acknowledge why you might be wrong, acknowledge why you might be right. And then going on to how to deliver all that information succinctly, quickly, confidently, to give the best pitch that you can. I think Andrea has spoken really good about the way you could structure your argument instead of starting with all the what's, all the facts, sort of all the boring bit, starting with the punchy, the interesting, the bit that's actually going to wow the people in the room with what you've got to say. So a typical format for a stock pitch interview should be a sort of a presentation and then being grilled on that afterwards in a Q&A. So Andrea, do you have any other tips on how to give the best presentation, or maybe the best stock pitch that you've seen?
So one thing about the grilling you mentioned, which is important, because you may enter the stock pitch by thinking that you're going to have to defend it hard. And I want to go back to what Shaul and Martina said earlier. You have to have, and you, Monica, mentioned the same, you need to have a ponderate, mature approach to things, in the sense that the decision to buy a stock or not is a probabilistic one. There's pros and cons. It's 50 shades of gray. If by the time they start pushing you, you retrace and increase the energy of your arguments, you're actually killing yourself and your success at delivering a mature pitch. You actually operate, assuming that you are in the UK, in probably the best country in the world for mature, ponderate reasoning. For me as an Italian, watching the debates in the parliament is a pleasure compared to the violence and that I see in my own one. But it trickles down into investment skills. I kid you not, because there is this measured approach to the art of argumentation. And you'll find that a lot of the people on the buy side actually came from literary studies, because you are taught the art of arguing, of making an argument. Now, that said, you may find actually among your interviewers someone who's got some form of a big, large ego. And so it's crucially important that you separate the person from the fact. So whenever you are arguing or making an argument, always separate the facts from the person who's saying it. And when people grill you, try to start by taking their own point of view. It's a sign of intelligence, by the way. if you can argue an argument and its exact opposite with equal conviction. So if someone is pushing you, instead of saying, oh, I think you're wrong, and because thinking that you're going to nail your pitch, instead empathize and say, oh, why do you say that? What evidence have you bringing forward? And then build an argument against it if you feel like, hey, you may find that actually they prove you wrong. In that case, mental agility to be convinced otherwise, it's also okay.
I think that speaks to the thing in investing is knowing when to get out of an investment, right? So people go into stock pitches buying stocks with high conviction that this is the thing to buy. This is the thing that will make them money. But you also need to know maybe what it is that would make you leave. So what would be the exit signals that you would need? And I think if someone brings that to you in a pitch saying, oh, have you thought about what happens if, the regulations change in this area, or that's something that could be coming up that maybe you haven't thought of, and being able to accept maybe new information or maybe someone else's analysis of your pitch, to take that in and learn from it in front of an interviewer is a really good demonstration of critical thinking, of intelligence, of maturity, that would really help you in a high pressure situation like an interview. So we're sort of coming to the last sort of 5 minutes. Could everyone give me maybe an example of something good and something not so good that's either happened in personal experience or just from presentations generally? I'm going to start with Shaw.
Yeah, sure. Presentation experience. Something not so good, I guess, would be not having questions. So I think, usually at the end of an interview, I don't know if it will be in a stock pitch, but probably it would be, they'll say, do you have any questions for me? To Andrea's point about preparation, you should always prepare questions to ask them, because there are questions. So if you haven't got any, it means that you haven't prepared any, and that doesn't look great. So, whether it's, let's say you're talking to a growth investor or a tech investor and you are pitching a tech company, once the stock pitch is done and the pressurized bit is finished, they'll say to you, do you have any questions for me? And you could say, well, I was looking at this company. When I was looking at this company, I couldn't understand this point. How do you approach that? Can you explain that to me? I think that's the type of level of curiosity that they want. So in terms of from real life recruitment experiences, if they say, do you have any questions for me? And you sort of say, no, I think that's everything. Don't do that. Other than that, nothing immediately sort of aside.
Thank you, Martina.
In terms of like the good thing, I think in a lot of cases, what people tend to do is just state facts about like what they read. So yeah, like on the company, on competitors, on the financial metrics, they just create like a summary of information on facts without actually sharing their view or like their thinking on or their own analysis based on the numbers or like the facts they found. So one pitch which really impressed me was like the person used basically the data about the market share, like company's performance, and basically created like a scenario, like 3 different very simplistic scenarios of like how market will evolve, what kind of market share we can expect from the company, and what financial performance and like business evolution, etc. Like, again, sounds trivial, but again, given you will be time limited, you will focus on really like understanding the company, creating this presentation. You may fall into trap of just sharing the information rather than sharing your perspective, your views, and creating at the end like your own analysis on this stock. So like be mindful of that, and this is what really this is like literally one person out of 10 like did that when I was like interviewing last time. So very, very, very important. And yeah, the bad thing, I guess like you can guess by now, I mentioned it like 100 times, but yeah, know the basics. Know what the company does again.
Absolutely, I think it's really important to acknowledge that the interviewer is here to get to know you if they actually just wanted to listen to top 10 facts about a company, they would look it up themselves. Literally their job. A big part is how you can interpret that, create a story, pitch who you are and how you are able to understand those things to the interviewer, not just list like, this is a company and here is where it works and this is what it does. And then just to end, Andrea, do you have anything else to finish presentation?
Yeah, maybe the four things: have a structure, lay it out to prepare the audience for that structure. And to Scholl's point, they may actually fast forward or choose. Number two, you mentioned about when to get out. This has impressed me once. Someone said, these are the signals that are going to tell me that this is not working. And the signals were measurable. And by the way, they had nothing to do with the stock price, which brings me another point, which is in investing, there is process, good, bad. There's outcome, good, bad. And sometimes the outcome may be good, the process may be bad. You have to get out. If the earnings are deteriorating and your thesis was based on earnings growth, but the stock price is going up, yes, you made money, but thank the gods and get out, because your thesis is broken, and that's the only thing that is measurable. The third piece that impressed me in the past, this is Martina's point, is the basics are really the basics. A company is selling something. They have a price, they have a volume, and then you can double click on those. You have different market segments in that volume. You have different price segments in those segments. You have the time axis, which will make things go up or down. If you can't explain like that, you don't know it. So focus on that. I think she's got a very strong point there. And the fourth one, spell your style. Again, spell your assumptions. I chose this company because I was looking for a fallen angel in the US mid-cap tech. Great. I was looking at this company because I wanted to find a company that grew at a reasonable price, compounders. I wanted this because I wanted something that is mistreated by analysts and poorly covered that has an explosive growth potential. Very, very key, because it will help them identify your style and everything else will follow. You'll prime the audience to listen to what you're going to say.
Thank you. I'm just going to hand over to Vicky now, because I think we've just come to the end of our time.
The main thing I want to say is a huge thank you to our speakers. I've been listening in the background, and I've just heard they've shared so many insightful, interesting, impactful bits of wisdom and knowledge and information, and I hope you all feel the same, and you will all go into your next interviews just feeling far more empowered and knowledgeable as a result of this session. So thank you. Appreciate your time and your efforts. And to everyone, please stay in touch with us. This is our last event of this autumn term, but as I mentioned, we've released our spring 2023 schedule. You can see that on the website, and you can start signing up for events already. It's www.gainuk.org. We're also on Twitter, Instagram, LinkedIn. We're on everything as Girls Are Investors, apart from Twitter, where we're just at our investors. But you can always reach us, sign up for our newsletter, and hopefully we'll see you in next year's events, and hopefully we'll see some of our speakers as well at next year's events, because you've all been brilliant and we really appreciate you. Thank you very much, everyone. Have a good evening.
Bye-bye.
Thank you so much. Bye.
Bye, everyone.